HMRC, which is the UK's Tax, Payments and Customs Authority, is reminding crypto asset users to check if they need to do a tax return, warning that penalties loom for unpaid taxes. Today's episode is sponsored by Cake Wallet, where you can send, receive and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys, available today on iOS, macOS, Android and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening everybody, and a warm welcome back again to Enter Crypto with me, Chris Kenyon. Now in today's video we're going to be talking about the UK and HMRC's recent warnings. HMRC, for anyone who doesn't know, is just short for His Majesty's Revenue and Customs, and they're basically the national taxing authority of the UK, and they collect all the direct and indirect taxes, and they also give back credit payments to basically all the residents in the UK. And so, as always, guys, let's just quickly dive straight into this article and then we'll read it out, see what we can learn, and then we'll comment after. So, HMRC, the UK's tax authority, has initiated a crackdown on tax evasion within the crypto space to address the emerging challenges associated with cryptocurrencies. These regulatory acts signal a significant shift in the regulatory approach towards digital assets, reflecting the government's commitment to ensuring a fair and transparent tax system. One of the vital focal points of HMRC's crypto crackdown is the identification and taxation of crypto-related income, and whether capital gains from the sale of cryptocurrencies or income generated through crypto mining or staking, the taxman is now keen on ensuring that all relevant earnings are correctly reported and taxed. Failure to comply with these regulations may result in severe penalties, reflecting the government's determination to bring crypto activities within the purview of traditional taxation frameworks. Understanding the tax implications has become crucial for individuals who have dabbled in the crypto market. Capital gains tax is a central component of the UK's tax system that applies to profits from selling or disposing of assets, including crypto. And crypto investors must keep detailed records of their transactions, including purchase and sale prices, transaction dates, and any associated fees. Moreover, the Crypto Asset Reporting Service introduction to HMRC aims to enhance transparency in the crypto space. And this digital tool lets users report their crypto gains and losses directly to HMRC, facilitating a more streamlined and efficient tax reporting process. And failure to use such tools or deliberate attempts to conceal crypto-related income can result in penalties and legal consequences. And then it just goes on a little bit about businesses and crypto taxes, but there's a more important bit here, which is the penalties for non-compliance. So as part of the crypto crackdown, HMRC has clarified that non-compliance with tax regulations will not be tolerated, and the penalties for failing to report crypto-related income or providing inaccurate information can be severe. Depending on the level of non-compliance, individuals and businesses may face fines, interest charges, and even criminal prosecution in extreme cases. Bitcoin investors and businesses need to prioritise tax compliance to avoid penalties and contribute to the broader goal of fostering a fair and transparent tax environment. Staying informed about regulatory changes and seeking professional advice is crucial for navigating the complex landscape of Bitcoin taxes, and the recently released law in 2023 states that individuals may face a fine of up to £5,000 and community service for not paying their taxes. And so what the government is doing now through its tax authority is trying to get a very clear message to everybody out there that uses crypto. Make sure you pay us. Do not forget to pay us, otherwise there will be serious consequences for you. And so this is a big warning from them to us. And what's interesting about crypto is kind of like what happens with cash and with gold. Now, I'm not advocating anybody evades the tax or anything like that, because obviously that would be wrong and it's illegal. But I'm simply saying that this technology exists, and it wouldn't matter whether I said it or not, as to whether people used it or not. But there are cryptocurrencies out there that are super private, like Monero, that if you transacted in Monero, you moved in and out of it, there would be no way that any government could, or it'd be very, very difficult, in fact, almost impossible, that they could even know what you were doing in, crypto world. And so that side of things is just impossible to regulate. They really are reliant on you volunteering that information. And it's really the same if we did a cash transaction. If we did, if you offered me a service and I paid you in cash, how would they ever know? They would never know. Or if we transacted in gold, gold coins or something like that, the government never knows. So it's relying on you to volunteer. Now, if it goes through the banking system, obviously they will know, or there's a good chance they'll be able to find out if they start getting suspicious of you. And it would be the same. It would be even worse if there was a CBDC. Because I would think they wouldn't even need to be suspicious anymore. They can tax you at source, and I don't mean on your wages, I mean on your wages, but on every single purchase, tax would just automatically be deducted immediately. No one would even have to declare anything anymore, because they would have all the information. And of course, you would have no privacy. The government would know everything about you. If you bought a chocolate bar today, the government would know. If you go to a cafe with a friend and buy yourself and your friend a coffee, the government know. So it's very dangerous when governments know everything about you. There's a lot that can be abused there. There's a lot of power. And even if the government of today is well-meaning, which is, you can have an entire debate around that already, it doesn't necessarily mean to say that it always will be. And once they get these powers, they'll still have these powers in 10 years, but we might not have the same government. We could have a tyrannical dictator in power. So it's really interesting that these tools do exist in the crypto world, as they do with cash and gold. And it's really the digital side of things, as in the private banking, is how the government can actually find stuff out nowadays. But most importantly, I really want to know what you think. So let me know in the comments below. It's whenever I do videos about the tax authority in the UK, I always get quite a lot of interest. And there's a lot of people split, I think, because we have quite a libertarian side to crypto anyway, that people, some people think that we shouldn't be paying tax, that the government shouldn't be entitled to it. And some people are somewhere in between, and some people say no, it's morally right that we pay taxes. So it's I get all kinds of comments, and it's so interesting to read them all. And so that's the article for today, guys. Thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out any future updates. And I'll see you all tomorrow evening. Take care.